This podcast is brought to you by the award-winning prop firm, Crest.
I'd read a lot of books by this time, and I was really, really aware of money management, position sizing, stop losses. I never really lost a lot of money. I've never blown up a trading account or anything like that. I've learned a lot from the likes of Larry Williams, and he'll often say that we're looking to catch trends, and trend is a function of time. The longer you can stay in a trade, the more profit is available to catch. Some of Larry Williams' old books, but my favorite book, I cannot recommend this book enough. It is fantastic. And basically what it is, it's a book filled with entry and exit ideas for strategies.
Episode 222. All right, folks, today we've got Jared Goodwin in the house. Also goes by the Transparent Trader on YouTube, and for good reason too. You're going to find out why soon. Now, Jared has spent the past 8 years studying Larry Williams amongst other top traders, Andrea Unger, other guys who've been on the show. In fact, Larry was only on the show 2 weeks ago, if you want to check out that episode. Now, what Jared has done is verified whether or not the strategies that he teaches actually work, and he's tested them over many, many years and now trades some of them live. Now, what we're going to do after this is we jumped on a video, we jumped on a video, recorded Jared giving you a breakdown of the smash day strategy taught by Larry Williams and how that actually performs in some different ways to get in and out of the trade. So worthwhile checking that out, coming up very soon. Now, other things happening here on the Trading Nut channel, we've got live streams still going on. In fact, we've got our second trader to pass phase 1 of the Crest 50k challenge. So if you want to see the trade he took, I think it's from last week, it's Herrera. So well done, Herrera. If you guys want to take part, there's a link under the video or in the description of the podcast to take part in this. Just enter the draw. Other things going on here, you've got the free TradingView Pro, links below the video and podcast. Now, if you're thinking after listening to the show, I want to automate some of this stuff and do what Jared's doing, but I don't like multi-charts, which is what he uses, and you want to stick with MetaTrader 4 or 5, then check out the links below the video to all the robot stuff that I've got, Robot Builders Club and all the other things in there. I'm sure we can find a solution for you there. So folks, enough from me. Let's hear from my sponsor and get on with the show. Crest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So one thing that really sets Crest apart is their no minimum trading days requirement on their challenge and verification stages. On top of that, traders who successfully pass the challenge and verification stages are eligible to receive a bonus payout of up to $30K on top of their funded stage profit split payout on performance. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more. All right, folks, here we are on Trading Up. We've got Jared Goodwin in the house all the way over there in the UK from the Transparent Trader. So welcome to the show, Jared.
Hello, Cam. Thanks for having me on.
Hey, look, today we're going to get your full 14-year trading journey to start off with, and then dive into what you're doing now and how you've managed to deconstruct the markets and gain a bit of information and insight into what you've managed to do and how people can learn from that. So to start off with, Jared, how did you get into trading and where did it all start?
Okay, so yeah, a bit of a strange one. I come not from a trading background. I don't come from a computer background or a programming background, anything like that. In fact, prior to trading, I spent most of my life fixing cars, actually mostly body shop wise. Anyway, so about 2008, 2009-ish, the guy I was working for, he used to buy and sell some shares, British Airways, in fact, because he had a little part-time job with British Airways. And I was just fascinated that, this was back in the day where he would ring up on the telephone to get the quotes twice a day to get the share price. And I was just fascinated that, he could invest a certain amount one day and the next day it'd be worth more or not, as the case may be. But that fascinated me, and I soon got into it. I got an old laptop computer, and I got I don't know if you remember, you used to get like a USB dongle for the Wi-Fi. Do you remember those? You could plug the USB dongle in. Yeah, and it could give you Wi-Fi. And I managed to get Wi-Fi in our workshop, and I opened a share trading account and started to buy and sell some shares just in some UK companies. And that's pretty much where it all started. And I did that, had this laptop set up in the corner of the workshop getting dusty. Did that for a couple of years probably. And that's pretty much where it started. I never,
And you made
in
money
fact,
on that, or did it?
I did. I actually did quite well. I think it was more luck, and I knew that, and that's why I was always just in the pursuit to learn exactly how to do it. A lot of the stuff that I happened to buy, I'd read from tips. These are shares, and I'd read from tips, and they'd just gone my way. But yeah, ultimately, I knew I didn't want to be trading off the back of somebody else's tips, so it made me, go investigate even deeper.
So where to next? What was the next port of call?
So the next port of call, I couldn't understand. Well, I was told that just because it was quite frustrating, just because the main market, so it'd be the FTSE 100 in my case, if the FTSE 100 had a bad down day, let's say it was down 1.5%, the shares that I was holding, which had been going up nicely, they'd also drop down as well. And yeah, we all know that. I didn't really quite understand it then, and it was frustrating. So I thought, why am I trading these individual companies? Why not trade the FTSE itself? So then I got into, we have spread betting over here. We still have it, actually. You probably know what that is.
Yeah.
And gives you access to trade all different products. So I started trading like the index, so the FTSE. And yeah, done that for another few years. And I mean, this took me probably right up to 2016. So I probably spent a good 7 years. This is all on a part-time basis. So there was no urgency. It wasn't like I needed to do this to earn a living. There was no urgency, but I was very passionate, and I would spend evenings, weekends looking at it. So yeah, did that with haphazard results, really. No real success. Eventually
Because
got into.
were you using your like sort of share trading strategy on the FTSE, or and
Yeah,
things
pretty
like
much.
stop
Yeah,
losses, and did you have
yeah,
those? Because a
yeah,
lot of people who trade shares at the start will just get in and they'll get out. They won't like have a fixed stop loss.
yeah. So this brings me on to, yeah. I was lucky enough that I'd read a lot of books by this time, and I was really, really aware of money management, position sizing, stop losses. So I never really lost a lot of money. I've never blown up a trading account or anything like that. I've never lost a big chunk of my account, just because I am pretty risk averse, and yeah, I'm one of these people, and it's probably in some ways to my detriment. I kind of want to know everything. I want everything right before I do the thing. And I mean, in this case, it stopped me blowing up accounts and that sort of thing. But getting back to the journey, so that was indexes. I then got into foreign exchange somehow. I think, I know how I did. I bought a book by Courtney Smith. It was a trading foreign exchange book. So I got into that. And then eventually, what really turned the corner was 2016. I discovered a guy named Andrea Unger, and I got onto one of his courses at the time. And that was the start of my algorithmic trading journey. So up till then, I didn't really have any plans. I kind of like technical analysis type stuff. I preferred the charts. I've always hated anything to do with fundamentals, always hated news, that sort of thing. So that was why I kind of moved to the algorithmic side of things. And then pretty much from 2016 through to today, it's just been algorithmic, and all of my live trading is all automated as well.
And so like to go from, I suppose, body shop work to automated trading, it's quite a big shift, isn't it? I mean, how did you overcome that learning curve?
Just having someone show me how to do it. I mean, I often credit Andrea Unger, and I credit him now. He had a really good course, and I use multi-charts. So that's the trading platform. It's very similar to TradeStation, and it's not the hardest thing to program. And I was sort of learning alongside Andrea's course, and I guess, okay, I was just fixing cars. I guess I do have quite a mathematical, technical brain, and picked up the programming quite quickly. So yeah, that's how that's how it went.
That's an absolute achievement. And we've actually, I said to you before the show, I've had Andrea Unger on the show before. I actually haven't had him on. I remember now, it was like back when I did 52 Traders, and my daughter actually, who was probably 7 at the time, she read out the questions and I read Andrea's answers because he didn't come on. I should actually try and get him on. That's a good point.
Yeah, you should. Yeah.
So okay, so you went from there. So how did your sort of first foray into coming up with, I guess at this point you're deep into strategies, and did you have a strategy before you started this or not? Were you sort of like,
I did.
This is my strategy?
Yes.
Yeah. And what was it? What was it based on?
So price action, obviously. It was the main one that I was using, and I happened to just go through a really good spell, was a variation of one I picked up in this book from Courtney Smith, and it just looked at an inside daily bar on the Forex markets. And it was a breakout of the inside bar. And in fact, I still trade a variation of it today, only on one market, mind you. But yeah, that was the strategy. So that was my first. It was really good to have a strategy to program and thoroughly back test as soon as I'd learned how to use some software. So that was the first strategy.
And was that like, what did you find out when you back tested that strategy? So when you actually got a lot more data and were able to see how it performed over time?
Yeah, it was interesting. It was, quite pleasing that I knew that it worked, especially on dollar yen, but I could quite quickly see on a lot of the other pairs it just doesn't work. And I had been trading it, and I'd been trading this manually. So this was before I was using software. I'd been trading the strategy manually, looking every night at about probably 6 different Forex pairs, looking for an inside bar and then placing the orders for the next day. But yeah, being able to automate or program it and automate the back testing. I'd also done a lot of back testing prior, but all manual, and not just this strategy, by the way. I probably spent, before actually getting into multi-charts, Andrea Runga's course, I'd probably spent the last 2 or 3 years back testing manually those sort of strategies. So I already knew that I was into mechanical or algorithmic rule-based strategies, and I've got many spreadsheets where you know what it's like, writing down the numbers and back testing using Excel.
Yeah.
So
what about the comparison between, so you ran your 8-year back test or whatever it was on the strategy that you'd manually tested, I'm guessing over possibly, if you're lucky, maybe a year or 2. And you saw that it didn't work on all these other pairs and it worked on one. What was sort of like, what were you thinking? What were you thinking at that point? What was it sort of like? Was there a revelation there? Like, damn, I'm going in blind or something like that? Or
yeah, I guess so. I don't really remember. Obviously, well, not obvious, but I dropped a lot of the markets that it clearly didn't work on after seeing that back test. Just completely dropped them. But I remember I was probably so wrapped up with what I had been learning from Andrea Runga in his course that I was testing so many other stuff as well at the same time and coming up with much better results. So that kind of went on the back burner a little bit, that strategy.
Yeah, it's interesting. So okay, so what kind of, let's put it into perspective for the guys listening and watching. What would you consider, much better results than what you were seeing? I mean, what was sort of like, this thing's really good because it does X, Y, Z?
Just a more consistent behavior, better, as in a better equity curve, a higher average trade value. That was probably the main thing with that inside bar original strategy. It was a day trading strategy. It was out at the end of the day, so maximum it was in a trade would have been 24 hours. It wasn't. It was less than that. So you're always struggling to get a high enough average trade. So I was developing a lot of other strategies which lasted days or weeks, and just more profit.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
Okay, and at what point do you sort of go, okay, this strategy is something that I'm going to now trade live? What was that sort of decision making point for you?
Yeah, that was I found it quite easy at the start. In fact, I say I'm risk averse, but when I first had a handful of strategies that I'd developed using the knowledge that I'd been gaining from Andrea Runga, I was quite quick to put them into practice. And I actually, looking back at them now, I was actually quite lucky that they did happen to work pretty well for the first year. After the first year, I ditched quite a few of them because I could see that they just weren't. It was mainly that I talk about the average trade value. I talk about the size of the average trade. So the amount of money per trade. So when you add up all the winners, take away the losses, divide it by the number of trades, you're going to get an average trade value. And it was really easy, or it still is really easy, to develop a strategy that gets an average trade of, let's say, 5 pips. But by the time you take out some trading costs, you look, Forex, you're looking at spreads, swap costs, that sort of thing. That 5 pips can almost disappear. In some cases, it will completely disappear with some pairs, and you'll know that yourself. So that was that's why I didn't quickly cut some of these strategies, but that's why I cut some of these other strategies. And then from that, that was sort of like the first year. And then from that time on, I was much slower to go live with strategies as they came along.
And what if you had to sort of try and group these strategies that you created that, didn't work because the spreads and stuff just ate away the costs and whatnot, how would you sort of describe them, or could you explain one in detail?
The ones that didn't make a high enough average trade, or the ones that cut?
The ones that you cut because they were just like, you ran them for a year and then they started performing poorly.
Okay, yeah. So it's a mixture of two things really. So if you imagine an equity curve of the strategy, some of them would continue working and they'd continue moving up to that right hand side really nicely, but they would have a too lower average trade. So by the time you've included costs, you're not making any money with them hardly. So that's the one group. And through comparing live trading fills, comparing my broker statement to the back test statement, then I could see how much it was costing in trading terms. So those ones I would cut that just weren't have a high enough average trade. And then there's the other side of things where the equity curve just started to take a dip and they just stopped working, and mostly because they were over optimized, or I just hadn't quite gone through the process correctly. And I mean, that's our biggest, as algorithmic traders, that's our biggest challenge, is not over optimizing, not building a great back test, but building something that's most likely to work in the future.
And were these price-based or indicator-based kind of strategies?
Yes, they were all price-based. Some of them time-based, based on biases, whether it be times of the day where some instrument is likely to rally or likely to decline. That goes the same with days of the week. And even days of the month, trading days of the month. And those ideas actually come from Larry Williams. I've learned a lot from Larry Williams reading his stuff. And he's a big, he's very big on things like trading day of the week. You can quite clearly see that there's repeatable times of the month. You might go long on trading day 12 and exit on trading day 18. And if that's worked for the last 10 years, it's pretty much likely that it's going to continue to work. So
it's interesting, isn't it? Because it's funnily enough, with building something like that in the robot lab that I run with the guys, where we're looking at a specific. We're only working on the hours, but there's this sort of like, this guy's come up with a way to Or he uses it himself, where there's this repeatable pattern of enter here, exit here, based on the hour or the day or any time. It's any time frame really. So okay, so that's interesting. Now, what about the ideas for the strategies? I mean, how were you coming up with these back in the early days? Was it just like somebody's given me the strategy, I'm going to come up with it, or were you sort of using your own nous to go, well, this is what I know, or were you looking at the price chart and saying, well, that looks like a repeatable pattern, let's try and build that?
Okay, so let's start with the last one first. Looking at the price chart, I have never looked at a price chart and been able to spot something with my eyes. And that brings me on to, let me just divert very quickly. Something that I learned from certainly Andre Arunga, possibly I've heard Larry Williams talk about it, but what a lot of people do, and I mean, it seems logical. What a lot of people do, they take a discretionary approach or a technical analysis approach, because they're a manual trader, but they look at charts, and then they try and program it, and they try to make that their algorithm, and most often it just doesn't work. So algorithmic trading strategies are very, very different to something you would ever try and manually trade on the charts. So that was just a little side note.
Okay. And could you expand on that a bit more? Like as to why they're different?
Yeah, I mean, looking at just different price levels. I mean, hands up, I don't know too much about discretionary trading. I've certainly not been a successful discretionary trader. Obviously, I've done a bit of it in the early days, but a lot of the times it doesn't work. People will try to implement splitting positions, exiting at break even, all stuff that you're kind of told to do when you discretionary trade, and it often doesn't work when you apply it to an algorithm.
Yeah, I found that as well. Like, moving your stop to break even, taking partial exits, for whatever reason, it just does not work. Like, it doesn't give you it can work. It doesn't give you as I suppose solid equity curve as robust kind of results, or even better results than just taking a position, leaving your stop, and taking the profit at the target, and suffering through all the pain that goes with the in between bits. And it could be, days or weeks for a position to close, depending on what time frame you're on. Okay, that's interesting. Okay, that is interesting. Now, if you had to sort of let's dive into what you're doing now. If you had to sort of look at all the strategies you've got running now, how many have you got that you've come up with that you would consider your top sort of, A-list strategies?
I'll tell you what's working best for me. And if you were going to ask me what my favorite strategy or favorite setup was, I don't have one, but I'll tell you which works best for me. And that's probably my favorite one. And that is breakouts into trends. That's been working really well the last few years. So I've made, unfortunately, you've heard of the 80-20 rule. Well, I can pretty much apply that to my trading, that probably 20% of my strategies have made 80% of profits, which, by the way, I don't like. We'd all like it to be, we trade 20 strategies and they all make a fifth of your profit, but they don't. 5% of your profit, but they don't. So the ones that have really shone have been breakout trend strategies, and they've pretty much been on the yen pairs, pound yen in particular.
Right. Okay, that's interesting. So there's a couple of things there. So the breakout into trend. It's funny because we had Thomas Nesnadal on the show a while ago. I don't know if you've heard of him, but he was Mr. Breakout is what he called himself, and he just went deep into breakout trading from an algorithmic point of view, and obviously he says he has something like 1,500 strategies based on different variations of a breakout. What is it? I mean, have you sort of gone down that route of just focusing on a breakout? And what does a breakout strategy from an algo point of view look like compared to And I'm guessing if you don't know, I can probably fill in the blanks. A manual trading point of view.
Okay, so typically a breakout strategy from an algo point of view, I'll be looking at highs and lows. So highs and lows over the last 20 days. So, I mean, you could use something like a Donjon channel to visually see that on the chart, but the highest high over the last 20 days, 40 days, or it could be a breakout above yesterday's high, or break below yesterday's low, or it could be looking at a time window of, let's say, between midnight and 8 o'clock, and then looking at a breakout above the high of that 8 hours or below the low of that 8 hours. So it's just a price level, and it's normally either highest highs or highest closes and lowest lows, lowest closes.
Okay. So, and then taking the profits on those, how do you get out of those breakout trades?
So those ones, and the ones that have seemed to have done the best, pretty much all stop and reverse, Cam. So for those of your listeners that don't know what I'm talking about, stop and reverse. So let's say I'm taking a breakout. If the price breaks above the highest high over the last 20 bars, the only way I'm going to get out of that trade is either a stop loss, because I do use stop losses, or typically it's going to be if the price breaks below the low of the last 20 bars. So that's a stop and reverse. It means I'm going to be stopped out of my long trade, and I'm going to reverse the position and get into a trade in the opposite direction.
Right. And okay, so that's if you get a loss. What about getting a profit? How do you get out at a
No, that works with profits. So imagine
right. So
you're
taking the profit. Okay, so you're not necessarily losing, but you're getting an opposite signal, and you're getting out. Okay, gotcha. Yeah. So what on that? What is your? Sorry, mate. Go on.
I was going to say, although these are pretty low, I was only looking a few weeks ago. These are pretty low win rate strategies. We're talking like a 35% win rate on some of these breakout strategies.
Okay. That was the other question I was going to ask. And what is your sort of like, if you're going to go risk to reward on those kind of strategies, what are you expecting to get on average?
So I don't really obsess too much on things like risk and reward, because I don't often use profit targets. A lot of discretionary traders, they'll use profit targets. They'll look at 2-to-1, 3-to-1s, 5-to-1s, whatever. I generally don't. I like to see how much net profit the thing makes. Is it consistent? Has it got a reasonably consistent equity curve? Has it got a high enough average trade? However, I do know on some of those breakout strategies, probably looking between 2.5 to 3-to-1 at the most, and that's with a 35% win rate.
Right. Okay. Which is a profitable strategy, right?
Yes. Yeah. So some of those have made me the most money in the last couple of years. Yeah.
And like looking at your sort of portfolio, I mean, how many trades are you expecting to see the portfolio take over the course of a week?
So I've got about 16 strategies live at the moment, and some variations of the same strategy as well. I seem to always have a trade, if not 2 or 3. In terms of how many open and close, I couldn't actually tell you. But I've always got.
It's always going to be so you're always in the market. You're
always
very
in the
really
market.
you're very really flat. Now, have you ever considered sort of moving to, you're saying a lot of the strategies you trade are JPY pairs on the forex market. I mean, have you ever considered moving to indices or anything like that, or do you test on these other kind of instruments and they just don't work?
Okay, so let's just clear that up. The trend following strategies tend to work best on the yen pairs. I have a lot of other strategies which work on other pairs, pound dollar, euro dollar, that sort of thing. I have considered, because I actually like the trend stuff now, I'm very comfortable with the trend stuff, and I've only really found that the yen pairs definitely seem to be the best within forex as an asset class. However, yeah, I do want to actually move now. I've been in forex now for what, 8 years or so. I do want to start moving and exploring, possibly into futures, because I'm told now. I'm told that there are some better trends to be had within futures. I mean, maybe you'll be able to tell me.
Yeah, I mean, I think generally you do get a better trend, but because the forex is typically mean reverting. Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot. I mean, in terms of, with 8 years experience in the forex market and sort of going into the detail there of trying to build bots that work around the forex market. I mean, if you had to sort of say to like a new trader coming into forex, here are sort of 3 or 4 things to look out for that you're probably not going to pick up straight away. Do you have anything like that, where things that like devil in the detail kind of things?
What would I say? I would say straight away, I would probably say stay away from short-term strategies, sort of day trading strategies. Look for, so a lot of my other strategies, not so much the breakout ones, but a lot of them are based on daily bars, price action of a daily bar. And they typically tend to be a much stronger signal on a daily bar than anything intraday. So yeah, stay away from trading intraday. Let your trades last 2 or 3 days to 2 or 3 weeks, and more so, because you come back to that average trade value thing. The size of the trade, you're really going to struggle if you're just looking at intraday trading within the forex, because there are costs, and I believe the costs probably are or can be higher than the likes of futures as well. So that's my number one thing. If you're going to come into it, look at daily bars, look at daily patterns, and look at leaving those trades to run a matter of days rather than in and out within a day. I remember, like I say, I've learned a lot from the likes of Larry Williams, and he'll often say that we're looking to catch trends, and trend is a function of time. So the longer you can stay in a trade, the more profit is available to catch. So that's that'd be my number one advice. And number 2 is just test everything. Just come up with. You don't even have to come up with your own ideas. Just find some ideas and just start testing them. Which does mean using, well, it should mean using some software, really, because you don't want to be testing things manually.
Yeah. It's funny. I should re-release it. I did do an interview with Larry way back in the day.
Oh yeah.
So I should actually re-release that here on the channel. One thing I was going to ask is around like sort of when you are optimizing, or let's not call it optimizing, let's say just testing your strategy. I mean, do you sort of apply a number of different techniques to that to see, like, if, say, for example, you come up with an idea and go, okay, well, here's the concept. I've learned it from Larry Williams' book or whatever. Will you then apply different, I suppose, what are they called? It's really tactics or strategies to that particular strategy to find potentially a better solution? And if so, what are your sort of go-to things? What are your go-to things?
Okay, yes. The answer is yes. Although more recently, within the last couple of years, I've really tried to step away a little bit. I spent a lot of time looking at intraday charts and looking, like I say, because I grew up with, or I learned a lot from Andre Arunga. He often uses sort of look at daily patterns. So if you're entering intraday on a breakout of, let's say we're looking at a breakout of yesterday's high, He might look at what happened the last 5 days prior to that day. So are we in a downtrend or are we in an uptrend? And that's the sort of thing that I would look at to try and improve the original signal. Nowadays, I don't do it too much because nowadays I do generally focus on longer term stuff. Like I say, patterns using daily bars. But with regards to trying to improve stuff, I guess I've been taking stuff away from strategies to what I used to do. And in doing so, I think I've made them more robust. They don't quite look as pretty in the back tests, but they tend to have carried on working better in the future. And I'll give you an example. Let's say, coming back to that breakout strategy, let's say I'm pound yen and we're going to buy a breakout of the 20-day high. I'll actually run a test, and I'll run a test from, let's say, buying the high, the 5-day high, right up to buying a 100-day high. And I might do it in steps of 5. So look at a 5-day high, a 10-day high, 15-day high, etc. If I find that the 20-day high is the best one, and none of the others work particularly well, I'll throw the strategy away. I don't want to know. I'm looking to see something that works consistently over that whole test period. That to me is robust. And then now this is something I learned from Perry Kaufman. Then I'll look at, then you've got the quandary about actually which length do you choose. So you found this trending strategy that works, but which length do you use? Because 5 works, 15 works, 40 works. Which one do you choose? So then what I'll do is, rather than choose one length, I'll split my position into, I typically use 3s. So I'll actually choose 3 of those lengths because I don't know in the future which one of those lengths is going to work best. So for example, this strategy, this trending one I use on pound yen, I use a 20-day, I use a 40-day, and I use an 80-day. It's actually a bar, sorry, because it's on 2-hour bars, but I use 20, 40, and 80, doubling it every time, by the way. But they all work, and everything in between works. So that to me is robustness.
Okay, and do you, on robustness, do you do any sort of walk forward testing where you test, say, to 2018, and then you get your settings that you think these are the ones, and then test again from 2018 to 2023 and say, okay, great, still made money, I'm happy. And
so typically what you've described, I would describe as in sample and out of sample, which is exactly what I do. Now, there's people in many different camps when it comes to talking about this. So Andre Arunga, I don't know if he still does it now, but the way he used to teach was he would take the complete data set, so 100% of the data, develop the strategy. And his argument was the more data, the better. And you're including very up-to-date data. And I guess he was so comfortable, he had so much experience with developing strategies. He had a very good idea of whether or not something was over-optimized or not. I've never done that, actually. It just felt comfortable from me from day one was to leave, like you just described, leave 2 or 3 years of the most recent data out of sample. So do all the development on, let's say you've got 15 years of data, take 12 of those older years of data, do all your development, do any optimizations. When you're happy with it, then you can look at the out of sample data, which is the most recent 3 years. And if the strategy continues, or the performance looks in line with the rest of the in sample data, then I'd be inclined to be happy to go live. In fact, even nowadays, I even do more. I use more out of sample data. So I'll often, like with Forex, I'll typically go back to 2008. So nowadays, because I've got, back in 2016 when I started, I only had 8 years of data. Now I've got 15 years of data. So typically now I might look at using 2012 to 2019 data as the in sample and do the development on that. And then the out of sample, I do the ends of it, so the most recent and the oldest data, and see how that goes. There's walk forward analysis. The way I know walk forward analysis is completely different. It's taking chunks and altering the settings on a predetermined time period, like every year, optimizing for the last, say 4 years, applying the settings to the 5th year, and then doing that in chunks. I've done it manually. We've got software, Multicharts does it automatically. And in all honesty, I don't really use it. I have never really found it that helpful. I know the likes of Kevin Davey, superb trader. He uses walk forward analysis. It's not something that I particularly use.
What about like frustration around this? I mean, are there any areas where you get mega frustrated and think like, this just annoys me? Or is it all pretty much like, okay, well, you know, I've built this robot, I've tested it, it failed, move on to the next?
Yeah, I think I've just accepted or been told / accepted the fact that the vast majority of stuff that you test, you're never going to trade live because it's never going to be good enough. And that might mean working on something for a few days that you just have to throw away. I guess that's my biggest frustration, is with a lot of, let's say, jobs. You get paid for every hour you put into your job. So if you work for 3 days, you get paid for it. With developing trading strategies, you don't get like an immediate obvious payment, because you could spend, like I say, you can spend 3 days on a trading idea, and at the end of it, you can just, no, didn't work, throw it away. And yes, you've gained a lot of experience. Yes, you know what didn't work, but you certainly didn't get paid at the end of those 3 days. So that's the frustrating part of it.
And from like a mindset point of view, are there any sort of special characteristics you think somebody in the space needs to have?
The willing to just succeed, the willing to just keep on going. Just keep on going. You will find something that works. It's not, it's cliche, but it is not a get rich quick thing. It's not an overnight thing. It takes a lot of work. You're up against a lot of very, very clever people out there doing the trading. So you're not just going to come to the market and win straight away.
Cool. Right, we're going to wrap up with a couple of quick fire questions here. So, what's your recommended trading book or resource?
Some of Larry Williams' old books, but my favourite book, I've got it here for you. Hopefully you can see that. You see that?
Yeah, I've never seen. Oh, Kevin Davey. Okay. Yeah, Kevin's been on the show years ago.
Yeah. So I cannot recommend this book enough. It is fantastic. It's probably his cheapest book. And all it is, actually,
do you want to read out the title for the guys listening on the podcast? Because they're probably going, what's the book? You just held up to the screen.
About that. Okay, so it's by Kevin Davey, and it's Entry and Exit Confessions of a Champion Trader. And the little subtitle is 52 Ways a Professional Speculator Gets In and Out of the Stock, Futures, and the Forex Markets. And basically what it is, it's a book filled with entry and exit ideas for strategies. And not only is it full of ideas, it's actually got the TradeStation code in there as well, or multi-charts. So that's really, really useful for people who are using TradeStation and multi-charts. And those 52 entries and exits, he gives examples on mainly the futures markets, which he uses them on, but I've swapped them about. I've used, entry number 13 with exit number 27, and on Forex markets, obviously, it's just completely full of ideas. So if you're a trader who has got a solid idea of actually trading, risk management, that sort of thing, I don't think he details anything like that in that book. But if you're just looking for ideas, which I find is the most difficult part of algorithmic trading, is coming up with ideas, then I cannot recommend that enough. And I've recommended that to a lot of my students so far, and they found it really useful. So thanks for that, Kevin. It's the book that I wish I'd written. So
well,
yeah.
And does he give like charts of, this is the equity curve that this one produced, or is it more just ideas?
Yes.
He does as well.
Yes.
Wow.
Yeah. It gives
Fantastic.
examples. Yes, and equity curves. Yeah.
Man, I've got to get some of these guys back on the show. It's been they have been on, but it was a long time ago when I did 52 traders, talking about 52.
Yeah.
Right now, last question. If you could leave our listeners with one piece of advice, what would it be?
Try and work out what sort of a trader you want to be, and that might require actually going out and doing it. Personally, I knew that I never wanted to be a day trader, discretionary trader sat in front of the screens. That's why I started out doing end of day stuff and eventually got into algorithmic stuff, because it requires no time. So go out and find the type of trader you want to be. Once you have found the type of trader you want to be, learn as much as you can, and you're probably far better off paying someone for some sort of education rather than looking at free stuff, unless it's mine, of course. But no, go out, find someone who you think is very, very good at it, because it's going to speed up your journey massively. When I first bought a trading program on Jairunga, it was really, really eye-opening. It really give my trading a real good kickstart.
Awesome. And last question here before we end up. So what's your preferred broker and trading platform? Look, folks, I know you want the answer to this question. Which broker is this trader using? Now, the answer has been sponsored by Black Bull Markets. So to find the answer out, you're going to need to go over to tradingnut.com, find the show notes page for this guest, and then all will be revealed. And before you wrap up, what's the best way for the traders to get hold of you?
You can find my website. It's thetransparenttrader.com, but really there's not that much on there. I rarely update that. Most of my stuff is on YouTube. So go to YouTube and search The Transparent Trader or Jared Goodwin, and you'll find me all over the place.
Well, look, a big thank you to Jared for sharing with us today. Everything we've discussed here, along with all those links, are in the show notes. To find them, simply search for Jared in the search box on tradingnut.com. Until next time, wish all my listeners trading happiness and success. All right, folks, there you have an interview done and dusted with Jared. Now, do remember, we shot a video afterwards where he breaks down the smash day strategy from Larry Williams. Not just breaks it down, but also gives you a 10-year track record of how it performed. You're going to find out that his win rate was actually quite high when he traded it in a specific way. Other things, do remember the live streams. If you want to enter that, then there's links below the video and podcast. And if you do want to check out how Herrera, for example, passed phase 1 of the Fidel Crest 50K challenge, then you're going to be able to see that over there on the channel. Other things, TradingView Pro for free. Yep, there's a link below the video to that as well. And if you're looking to automate anything, then yeah, check out my Robot Builders Club, where I've got a whole bunch of solutions, not just Robot Builders Club, but other things there as well that you can sink your teeth into for the MetaTrader 4 and 5 platforms. All right, folks, enough from me. Have a great trading week, and we'll see you in the next episode.